Hi traders, you are welcome to this video on the SMC Crypto Trading Strategy. This strategy is a structured method that focuses on trading alongside institutional order flow by reading the market through smart money concepts. All right. So basically, smart money concepts, or SMC for short, is a trading approach that focuses on how large market participants, such as institutions and market makers, position themselves. The goal is to follow their footprints by identifying market structure shifts, liquidity grabs, and price imbalances. Okay, so it is important that you note the main or the key components of the smart money concept. Okay, and the main components of SMC include market structure, which is determining the trend direction by reading higher highs and higher lows. So you need to be able to read your higher highs and higher lows. All right. Market structure is very important. Okay. In an uptrend, you're going to be having higher highs and higher lows. In a downtrend, you're going to be having lower highs and lower lows. All right. Now, the next main component is are the order blocks. The first one is market structure. The second one is order blocks. So the order blocks are price zones where institutions have placed large buy or sell orders. Okay. And then the third component is liquidity grabs. There are points where the market sweeps stop losses. Okay. Remember that, sometimes you might have a stop hunt. Maybe you enter a trade, you set your stop loss, and price will go and hit your stop loss and continue back in your direction. So, things like that happen. And sometimes, it could be just a technique of the smart money. So, liquidity grab is another main component of SMC. There are points where the market sweeps stop losses or pending orders before reversing. And finally, we have displacement. Displacement is a strong impulsive move that shows where big players are active. So now let us go further to identifying bullish and bearish setups. Okay. In a bullish setup, you might see price sweep liquidity below a previous low. Okay. So things like that could happen sometimes. Okay. We can probably use this as an example. We can see how price, was initially respecting this support level. You can see rejection here, 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 and even here briefly. And then you can see how price dropped below it. Those that might have entered a buy trade here, they would have gotten stopped out. So you can see how there was a liquidity sweep around here before price continued back in the original direction that it intended to go, which is the bullish direction. So in a bullish setup, you might actually see something like this: price sweep liquidity below a previous low. So once such a thing happens, you can enter a bullish trade, but you know ensure that you find a bullish order block first. All right, so you watch out for a break of structure to the upside. Like, for example, you can see price already started forming higher highs, higher lows. Even from here, from this point, price already started forming higher highs and higher lows, right? But you have to look out for, you know uh you have to look out for this particular high to be broken, showing that the bias has changed back to a bullish bias. So in this case, you can see that as after this liquidity sweep happened, then we had a change of character around here. Price rose above this zone, this particular high. Remember what we talked about. Okay, that should be a previous video, but I'm just gonna do a very brief recap. Okay, so when we have a bullish order block, it means that the last bearish candle before the last bearish candle before the impulsive move that broke the structure. So in this case, if we are looking for our last bearish candle before this break of structure or this change of character here, so this is going to be this, right? So you can see that this is the last bearish candle. This is the last bearish candle before this change of character happened. And if you look at it closely, you would see that, let me change the color of this so that we do not get confused. So this is our order block, right? This purple line is representing our order block. And you will see that price actually came back to tap into this order block. You can see that price came and tapped into the order block. So this order block was mitigated, and then we had this bullish move. Okay. So basically, in a bullish setup, you might see a liquidity sweep, below the previous low, then enter a bullish order block, then break market structure to the upside. In a bearish setup, price might sweep liquidity above a previous high, then you tap into a bearish order block and then break market structure downward. So these patterns often provide the clearest trading opportunities in crypto using SMC. Okay. Now for the entry triggers, right? They include a break of structure in your trade direction, um, just like this example that we looked at here. A break of structure in your trade direction, candle patterns showing rejection, a clean mitigation of an order block, followed by momentum. So it is important that you always wait for confirmation rather than relying blindly at a zone. This helps to filter out false setups. Okay. For your stop loss placement, you can use levels just beyond your order block or your liquidity zone. For your targets, for example, here we can use this level for our stop loss. If we are going to enter here, I use here for our stop loss, right? And then for your targets, you can aim for the next liquidity pool or structural point. So in that case, we can actually target this particular zone. You can see this particular zone. You can target it. So you can see that around here, price got to our take profit. Okay. So just make sure that you keep your risk per trade small to protect your account over time. Avoid overtrading by sticking to your plan and only taking setups that meet every condition. When you combine market structure analysis, liquidity concepts, order block zones, and disciplined execution, you create a powerful SMC trading framework for crypto. Consistency and patience are key. Okay, so that is the complete SMC crypto trading strategy. Apply it to your charts, refine it with practice, and you'll be able to trade with the same principles that institutions use. Click like, subscribe, and turn on notifications for more trading breakdowns if you enjoyed this video. Thank you for watching. See you in the next one.